Hello again, guys. Right, I didn't intend to make this video because, quite frankly, I forgot about the fact that I'd taken these two trades. Didn't mention anything about them on the Twitter feed, but I think they are important for many reasons, but not least of which is to sort of hammer home the fact that these late reversal trades, once the banks, institutions, whoever is manipulating the markets, forces the price down, and then all they're doing really is taking profits and potentially using their own money to drive price up, either by selling or buying or whatever they do, to potentially push it down again. Price has to move. It has to move for them to, those greedy bankers, to make their money. And if you believe that, then you know with certainty you can cash in on that move. And I think this method works perfectly with that thought process. So we've got a load of lines on here, and I'll try and explain what they are. Basically, as the price is moving down, I'm drawing a line on the highs, as I've mentioned in the 3 candle reversal videos time and time again. And I hammer this home as well. Although I talk about all the other different bits and pieces, pivots, Mo lines, Fibonacci's not very often, but I have studied them, and they are very, very powerful and very well used by the big boys. And that's the whole point of what we do. We are doing round numbers as well. We are just trading what the big boys are looking at, in my opinion, and in a lot of profitable traders' opinions as well. So back to this H1 reversal level there. If we wanted to put an H4 reversal level on, that's all we have to do. We put it up here, but we expect price to have a problem at these levels too. So I will put them on now, because it's as simple as that. That's all I do. It takes 5 minutes to draw these levels on the charts. And this script I don't sell. You can get it made on a site called Fiverr, or I think there's a free one available on Forex Factory, and one of my followers, Mike, has had one made as well, and he will happily sell you that one if you prefer it. So this is priceless in my opinion. It's such a time-saving and important aspect to trading, but they can be just drawn on manually. All you do is bring your line down, put it on there. If you're not used to this sort of stuff, then you can look at the actual level. The high would be 174458. I know I'm digressing, I apologise. Bring up the properties, 174458, and that will fill it into the precise level, so you are correct. And I'm not sure whether you can put the description. Yeah, you can put the description in there. Just type whatever you want on there, and that will come up in the description thing. There it is there. The level will have snapped to the exact level of that high, and that then is how you do that. So back to the levels. So I've got my H4 on there now. I've got the level that it has to get through before it gets there. You can do the same for these ones as well, because they will cause price to falter on its way up there. If it tends to break there, that will then cause a problem if it gets that far, potentially. Sometimes price cuts through if there's news, like a knife through butter. But the fact is, if it wants to get any further up than that, it has to get through it and to it, which is why we can use it as a target. So I have digressed enormously from the original thing, but H1 high, this doesn't matter so much because we're looking at the reversals, and the reason for that is a trend reversal is what the most important part of this process. The getting up there is a sort of prerequisite, as it were. We get through that one by this close. This would potentially now cause a pullback to test these old resistance levels here below us as support, which is how they make their money, as it were. And then we may well continue on up through these levels. But as I said, I didn't explain that clearly. The reversal level is the important level. These ones are just noise in the road. on the way to that level, because the power and the importance is a reversal of trend, which is why we identify the H1 reversal level, the penultimate high, and the penultimate low, ultimate low, and then the rest of it is just it's just the toing and froing of the market manipulation. So if I zoom out, then you can see these other levels. That H1 level there is that low there, and the reason that's there is because to get up to these levels and this level, we've got to get through that level. The next H1 level, or the green level rather, is that one there, because to get up to here we have to get through a support that will potentially act as resistance. Just let me double check that is that one. No, that's that one. I apologise, I thought that was a bit uncanny. That one there, that this was correct to the level, that one there is that line, which once it gets through that one there, and before it can get to there, it's got to get through there. So these are all areas that I would treat as potential target areas as I'm scalping, because I don't want to suffer unnecessary drawdown. I can get back in using a 1 minute chart. I hope that's clear, and I hope that now makes sense as to why I scalp as opposed to swing trade and just suffer the drawdown. So that's the H1 levels all explained, all three of these green levels just drawn on the charts. But the interesting thing to notice is where price actually bounced or tested, should I say, as it pushed up with my trades. We've got the M30 level on there, hidden in there. Now we can see the reversal levels on M30, which is that one there. M30 high is that yellow level there, and the next one, M15 high, is drawn on the M15 penultimate level. That one there. So that's all the levels explained. And then finally the trades. Well, the first trade was taken as a result of an M5 RSI histo alert. There it is there. Bust, pull back, break and close, take the trade on the next bar. And you've clearly got low, high, higher, low, and once this high is broken here, a higher high. These areas would likely cause a bit of a problem, but because they haven't broken this low there, I consider those to be, you can call them whatever you want, minor resistance, short-term resistance. They are not valid long-term resistance, as it were, because they don't form they haven't broken that low. They do not create another a downtrend. There's no downtrend there. They've tried to make a downtrend, but it's failed and reversed at this point here. Once we've got a new uptrend in place, low, high, higher, low, higher, high, with the high of that candle there. And if we look at the line charts, you can see that clearly. Low, high, higher, low, and the broke of that is the new trend in place, which would have been a candle over here. So that's why it's important to always double check your line charts. I fumbled around thinking of the correct termination explanation of what a line chart is. It is actually, I knew it, but I forget more than I've or most of what I learn as I go through, because it changes. So the line chart is the one EMA, and it is the close. I did say it might be the median, average, It's highly important. It's the close of the price. So I can put that on there. Actually, we can do that just to show you, as soon as I'm in a chatty sort of mood. Insert indicators, trend, and moving average. Parameters 1. I did it to test it, as you can see. Put a different colour on there. Go for a lovely little medium green. Oops, and I didn't put it on the close. What a dork. That'll teach me. I was just testing it. Open, as you can see. You can put it on high, low, median, all that lot. put it on the close, and they replicate each other. So basically that a moving average is set to 1 bar. It's the price, 1 bar, it's the price of the close, as opposed to the wicks, as it were. Okay, so back to the trades. So the second trade, you're probably wondering why I got out of one trade. Well, I set my target, I was happy with my target, and then as I double check the higher time frame, we need to get rid of that moving average now. I can see could see we had then moved, and this is what I mean by moving into the higher time frame. The price, zoom in, the price after that one had closed, we actually had, or just before it closed rather, we moved into a new, you could call it a phase, I suppose. You've gone from the 5-minute RSI histo break and close, had a little bit of jiggery pokery here, and then gone into a 15-minute break and close. So the power of the higher time frame always leads the way. And then as you can see, price finally tested these this H1 high, which was the H1, sorry, the support around about this level here, that one in there. So you know, what can I say? It's always about tests and retests. You know, I wouldn't have wanted to go further than that one, which is why I set my target near the round number. We did we have the pivot under there? No, we didn't. Or actually, I think I took the pivots off the charts. I think there was a pivot under there as well. Well, it's gone on too long, this video now, so that's the two trades. One was for 10 pips, one was for about 6, and you know, I think this one clearly shows, and that was why I wanted to make this video, how you can roll over into the higher time frames. That's why you want to keep an eye on your higher time frames, because as you can see, actually what's happened here now is we've had a push up, a pullback, and a new break and close on the 30-minute. Not much momentum in that one though, but it'll be interesting to see whether they do push up further. So if you've got time to spare, have a look at that on Monday morning, Sunday night, Monday morning. Thanks for watching. Have a great Saturday.